Welcome. My name's Jodie Knight and I'm a popular investor over on eToro. You can find the link to my live portfolio down below in the description. But for now, my portfolio is clearly taking a bit of battering this week. Year to date, 6.93% and 2-year return 4.05. Important to note that the actual two-year return on eToro is a bit weird because it calculates to the last full year, so it's actually more like 2 years and 7 months in that. So I think when it actually rolls over 2 years, the number's going to shoot up dramatically. It will wipe out the drop down year. In this video, we're going to talk a little bit about my core positions. Typically, I like to focus on my ones over a 10% weighting, but due to the market pullback, as you can see, I've slipped a little bit under that. That does mean I'll be bolstering these positions in the coming month. But mainly we'll be looking at PayPal, Sofi, Tesla, and we'll look at CleanSpark, but also we'll look at Bitcoin because the price of that will be driving CleanSpark to some degree. But if you want to see a full write-up with details on exact prices and stuff, areas that I'm looking at, check out my website at www.thegraftytrader.com. First up, we're going to jump straight in with PayPal. We had a really good price push on earnings. We did crack out of this downtrend, but we did get quite a hard rejection from wanting to fill this gap and this historic resistance. It has slammed back down. A lot of this is from the market worries. Financials have been really hit quite hard. So I'm actually quite impressed with how price is holding up on this bull market band. But that said, if the market continues to be weak, you could see new lows on this one. Next is the $60.29, and then under that, this black line. But the main thing about this is we do have a lot of support below us. So it would still be quite hard for PayPal price to break below this, especially with the aggressive buybacks they're doing. I think price is getting more and more stupid on this one. RSI is flat again, so can't hate that. We did tap overbought a little bit, but we've come down. That's definitely cooled off. This def cross still coming together, still looking bullish, and flow has stabilized a little bit there. Moving on straight to the weekly. Definitely don't like the large wick. Typically, the large wick action on here it doesn't continue to sell off too much, but it's not ideal. We did close green, which is a little bit better, and I still think this is going to be range bound now, unless something happens in the market. I think the main driving factor for PayPal is probably going to be cuts. But I think Wall Street is starting to see the light a little bit on this one. I did update the website with the PayPal earnings report and my thoughts on it. So if you want to go check that out, be my guest. But on the weekly, we're also flat. Dev Cross looks like it wants to start converging again, but really we need some institutional stacks going on here, and flow is flat. My targets for PayPal, I think I mentioned this a bunch of times. I'm not really planning on selling anything under $100, but the main thing I want to see is this gap close to 72. If it continues to be depressed, I might actually scale in slightly more. My conviction in this one's very strong. Downside, we've already talked about that as well. The options market for PayPal next week, we do have a lot of volume on this $50 range, so that's going to be a really, really strong support if we ever get down that low. I don't expect it to. I think it's going to get stuck more in this 58 range, but that I think depends on the overall market sentiment. We really need to see some good data to stop the bleed, I guess, is the phrase that we'd use. Up to the upside though, $65 looks good if we push it out to the week after. Ooh, targets everywhere. So $60 is going to be a pretty good level to hold at. And then again, we've got lower at 52, an odd number to have a target at, but whatever. And to the top side, 65. Now, if we go out to 2025, high targets are still in play, 140, 145. But again, I'm probably sticking with 100 unless I see the advertising business really kick in, and then I might be inclined to hold it out here. But we'll see. That's undecided yet. And then if we go to 2026, $95 is your resistance level there as well. I'm not sure why it doesn't show higher than this on the, but it's looking pretty. It still looks pretty bullish in the long term, basically. Short term, it's going to be rough if we come into a little recession as well. Next up, we've got Sofi. This is another financial stock that I hold, so definitely got battered as well, along with the rest of them. I did think that initially it was going to hold at this bull market band, but as the macro market deteriorated, so did price here. So now we're back in the danger zone here at $659. A break under that gets us down to this original $630 shelf. I would love the opportunity to buy at this level, but I would prefer if something started moving up so I could rotate some cash around. It's getting a bit tiresome. I think a lot of the retail traders are getting very fed up. I'm seeing a lot of bearish sentiment out there. You've probably seen it as well. Oh, trading's such a con. These guys are robbing us. It's just this is how the market works, guys. It is sometimes we have volatile periods, and normally that's around earnings, which are happening, and Fed meetings, which are also happening, and then we've got really bad macro data coming in at the moment, which is going to make a lot of worry come into people's minds. Even Wall Street will be starting to flap a little bit, so we really need some fair data to stabilize things. But looking a little bit more down here, we've got the RSI it's fairly neutral, but could go lower. The Golden Cross is still active, but retail are really starting to flush the whales out, and I think that's going to result in a death cross if price doesn't bounce here. We do have this little volume shelf here. It's hopefully it holds. Hopefully, this is one stock I don't want to keep buying more stuff off because I would like to primarily focus on other things at the moment, but we'll see how things go. And flow is flat. Targets on this one, nothing's really changed. I would like to keep it at 10% weighting, but as I've just mentioned, I'm trying to rotate a little bit more into property related stocks and some discretionary stuff that's a little bit cheap at the moment. And then also we've got tech starting to look like a good deal again. So there's a lot of opportunity in the market right now, and I'm very low on cash. So I can only spread my money so far. So I'm really gonna have to think about which stocks I want to prioritize at the moment. And I have started already to make some moves in my account. So if you want to go check that out, you can check out my closed trades, what I've rotated from, and then you can look at my new trades and go from there. And then if we go to weekly, always looks horrible. On the weekly, it doesn't look so bad. I mean, we're kind of in this range, the $650. Clearly, a break below here would not be pretty. The downside after that could be all the way to $6. Not ideal, but is what it is. RSI is flat. Death cross still kind of coming together, so it's still got time to reverse. But like I've just mentioned, this is all going to come down to macro. If the macro continues to go downhill, then financials are going to go down with it. It's just how it goes. We did get recently oversold, but we bounced up, so that's invalidated. And we did have the golden bar here. Given the recent price action, that's going to be invalidated as well, I think. Let's take a look at the options. So for next week, it still looks relatively bullish here. Resistance is going to be $7.50 and then $8 and then higher at 10. Though I'm not expecting that next week. That'd be a bit insane. But we can take a look for the week after. We're already below this support. So next support under that's $6, which we already looked at on the chart. And then higher again is $8.50. That seems more reasonable target, but probably not in the next few weeks if the macro is going to continue like this. We can take a look further out though, how people are feeling after earnings. Ooh, interesting. So yeah, starting to get a lot more bullish sentiment in the long term. I think SoFi is going to do incredibly well as rates come down. They've positioned their business beautifully. I did put the earnings for this on the website as well, my thoughts and a breakdown of them. So go check that out if you want to know more. Let's take a quick look at 2026 as well. $10. $10 hasn't really changed much from the last few weeks for the 2026 resistance, but it's definitely a key level. $10 is going to be pretty strong, I think. On to Tesla. I'm actually really excited about the price action in Tesla. I know a lot of people will be like, oh my God, it's gone down again after they had a breakout, but Tesla loves filling its gaps. I said that a few weeks ago when I was closing positions up here. It just loves it. If you look back historically, it normally always tags them. So it makes Tesla pretty good to swing trade. Now, I probably will take some swing trades on this as it's now well in the gap. I do think it could come down more though. But this bull market band and the confluence here is going to give us quite a nice attempt at support. But like financials, companies like this are going to be heavily affected by macro. If we go into a recession, people aren't buying cars, are they? That would be stupid. But they do have their energy business and stuff to fall back on a bit, and that should help bolster things. But 2025 remains to be the year that we should be seeing large moves on Tesla. Any price action around here is just playtime, really, an opportunity to build a good sized position. So my targets really haven't changed. This is a long-term hold for me. I don't plan on selling out of anything, but I will be buying more in this area. If we continue to buy more, a fallback down under 200 would be lovely, so I can scale back into that one. The RSI is neutral. The whales are sliding out, but retail's kind of holding back a little bit. I think I especially get a lot of hate from people about why I'm holding Tesla. It's overpriced. I argue about it all the time. So I'm not going to make too many remarks on it on here. You could probably just go look at my wall if you want to see some arguments about it. But other than that, flow is flat. So yeah, I love that this has come down. So I'm very happy that I sold a bunch at the top there when I was rejigging my portfolios a little bit. Moving on to the weekly. 3 down weeks. So I wouldn't be too surprised if we had a little bounce. But given the macro, like I mentioned with the PayPal and Sofi charts, macro is going to be driving these ones for a little bit. We'll see what happens. If we get some good data next week, we'll take a look. I'll take a quick look on this at the end as well and see what's coming up with the macro data in the next week and see if we can find any way that we might get not awful data. So on the weekly, we're also RSI neutral. We did tag overbought, but that's cooled off, so that's not a concern anymore. The golden cross is still active, so still pretty bullish on that. And flow is pausing, but it looks okay. So we'll take a look at the options then. So it looks like price for Tesla slammed past a bunch of its supports here, but 200 still remains the beast. It's really going to struggle to break under that without something catastrophic, or the macro just stays on this crap show. But definitely a bounce could happen here. A lot of people will close their positions, and that will cause price to move back up. So that could be quite a good point to hit. Upside resistance is still 300. Lots of the bullish people looking at that level, but again, all these trades in here, that's volatility traders, I would imagine, wanting to catch some of the moves because they know Tesla likes to chop out next week. Same thing, man. People just picking numbers out of a hat. I think a lot of these, I don't even know how they've come to the conclusion. But 200 again is going to be really tough area to break unless we ping through it on some terrible news and the macro is collapsing. Other than that, January 2025. Still a lot of bearish sentiment here. I guess people are starting to think really bad things are going to happen with the economy, which is possible. But then the upside target is 300 still. So if we zoom out a little bit, we see definitely more bearish sentiment for Tesla right now in the short term to a year. I am planning my portfolio on the basis that 2025 is going to be a banger year. People are going to want to front run when they see the numbers coming up. But time will tell who's right, who's wrong. I'm patient. Might actually be wrong on timeline, so don't hold me to that. And then we got 2026. A lot more bullish creeping in, but it's still, I would say, fairly even, although the downside is fairly limited compared to upside. So that's something to bear in mind if you're thinking of shorting this one. Moving on to CleanSpark on the daily chart. Obviously, we had a bit of a disaster sell-off here. I think this is technically classed as a risk-on stock as well as Bitcoin, which also saw a drop. So bad macro is not supportive of assets like this. So we've come right back down to this $13.62 level. there is a lot of confluence here. We've got this blue wedge coming here, the historical support. But overall, it's not the best candle you want to see. There's not much wick action around it. It's a pretty bearish candle. If we can't bounce here, then we're probably going to start moving down to fill this gap. I mean, I would love to be able to buy more at this ridiculous price in this point in the Bitcoin cycle. But like I've talked about earlier in this video, I'm running a bit cash poor now. So there's been too many blooming bargains. I know women love shopping, but come on now. The RSI is starting to get a bit overheated, but not overly so. CleanSpark's pretty comfortable down here normally. The golden cross faded straight into a death cross after we broke down through this bull market band. It was a real shame to see this huge volume shelf break lower, but the macro really did us dirty on this one. And I think macro is going to be driving this one as well for the foreseeable future. So really, all my core positions are at the whim of Mr. Markets right now, rather than individual earnings and stuff like that, which normally drives price and technicals and all that good stuff. Flow is negative, so a lot of people rushing out this one, retail dominating this one in the short time frames. Target wise, target's not changed again at this one. Not really thinking too much about closing at this golden Fibonacci level. I'd like to hold a little bit higher, but if I'm going to be scaling back into this one more in the coming month, then I probably will trim out a little bit of it as it starts to rise again. Probably like these swing trades here, use the same level at 2065 or something like that. Moving on to the weekly. That is an ugly weekly candle, I gotta say. There's not much wick action on that either. That candle looks pretty bearish to me. So typically we'd see some follow through on that. But again, if the market's up for it, we'd like to see a bounce to get back above that volume shelf. Any bounce that's not getting above that is going to have a tough time hitting over it. So it's not going to be bullish until it can go over that volume shelf. RSI is neutral on the weekly. Institutions still holding in there, and the golden cross is still open. I'd love to see this start expanding though, but flows flat. So it looks a bit more bullish on the weekly still, but that candle, I don't like that at all. It's just going to be a quick look at the options on this one. As you can see, we're pretty much falling right to the bottom of the volume, where all the volume of trades are. The upside resistance is probably going to be $18. That's a tough one, but we're now below the support, which is not ideal. So we definitely would like to see ourselves get back over that. Looking out to next week, $30 is your resistance. I mean, that's pretty ambitious unless Bitcoin absolutely flew. Although judging by what it's done over the weekend, it's not looking too likely. Not in the immediate future anyway. Bitcoin did have some beautiful price action before all of the bad macro. It was chopping lovely in here, wicking around, getting tighter. They used this bull market support band to really build good base, which was setting up for a lovely breakout and then pull back. But Friday happened. Not ideal price action. We slammed right through the bottom of this bull market band and then broke down. Next stop's going to be this golden fib. We're very close to it already. Wouldn't be surprised to see it hit that before Monday and the volume shelf there. But really, if this doesn't hold, then we're going to head back down to this next level, 52k, and then the purple trend line, which would be again 47. I mean, I would love to buy at those levels again. I'm actually thinking about having another swing trade when it hits the golden fib, because that's normally a pretty good level to hold. Although I'm really not confident in any of the downside levels in any chart holding if macro is going to throw its dummy out the pram again. But charts wise, it's getting a little bit overheated, but not overly so on the daily. Golden cross is really starting to come together aggressively. I don't like that. And the flow is negative now as well. So not great. The weekly action, I was kind of hoping that we'd see some bounces and then it would help lift the market up a little bit, seeing as they would see that Bitcoin wasn't too unhappy. But after today's price action in Bitcoin, I'm pretty confident that's not happening. Weekly chart. Again, another ugly weekly candle. Seeing this on a lot of charts this week, I can tell you that. But again, this golden Fibonacci level, it's looking like if it's going to stop anywhere, that's the level it's going to want to hit. But the support under that also looks fairly decent on a longer time frame. So we'll see. Weekly RSI flat. Weekly looks a lot better on the MACDX Plus. Much prefer this one to the daily, and then flow is pretty stable, not too bad. All in all, I was super bullish on this one. Now I'm more neutral. I did promise we'd take a look at the macro that's coming out next week to see if we can find anything to pin our hopes and dreams on. On Monday, straight out the gate, right around market open, we've got the S&P Global Services. I think this is going to be quite key in whether we continue to bleed or not. This data really needs to come in at least in line with forecasts for us to have a bit of confidence that things aren't hitting the fan. Then we've got a Fed daily speech. I'm thinking in the speeches we're probably going to see a lot more commentary on the cuts needed, the data's weakening, that kind of thing. That would be pretty good for the market. I'm not sure how many people actually listen to these speeches, so we'll see. Tuesday, not too much exciting. I don't think the market will bother with. Housing data, again, not too much of a concern. Car prices and stuff, we know that's probably going to be garbage. Oh, Thursday, more jobs data. Yay, I can't wait. It's forecast to be worse, so we'll see. If it's in line with this, I think we'll be okay, but if it's a lot worse, then it's probably more downside coming. And again, more speeches to soothe the wounds on that one. And Friday, nothing important. So, there's not a whole lot of exciting data coming out, but if it can just come in okay, then the market's got grounds to steady off a little bit. But we also have earnings coming out this week, so we'll see what those companies have got to say as well. Probably worth paying special attention to how the consumer's feeling now, as it's all eyes on that, I would think. If you enjoyed this video, found it useful, give me a like, share, and subscribe, and I'll see you next week.